What do we see is that the revenue versus the spending is gapping seriously year after year, and the deficit right now is 7.5%. If we are referring to what Ray Dalio, Richard Wolff, Peter Schiff, or Mark Faber are saying, which are major fund manager, they are saying that if United States is not able to reduce the deficit by at least 3.5 to 4% in the next 12 months, United States will go bankrupt. So the level of debt that America is facing right now is $36 trillion. If we are looking at the curve, we see that in 2020, at the peak of the COVID crisis, we have a major gap of $4 trillion in less than 1 year. This is major. And since then, the debt have been continuing, in fact, to grow in an uncontrollable manner, which made, in fact, the interest debt that is supposed to be reimbursed every year to $1.1 trillion. If we go back, in fact, to the dashboard of the DOGE, Musk has been able, in fact, to save $170 billion in less than 2 months. Is it going to be enough to shrink the interest of the debt? That is a very good question. We will see at the end of the year. But he's in good progress. I don't know where he can cut anymore, because at a certain time, it will be hurting, in fact, the way that the government is operating. So now let's look at the global market. Today, if we are adding the market cap of every company within the United States, it represents 200% of the GDP, which means that the market today, the Dow Jones and the Nasdaq, are over-evaluated. We cannot envision that in the next year or so, or in a short period of time, the GDP will be growing, in fact, to represent completely the market cap of all the companies together. We can imagine that every company is projecting itself in the future by giving some good projection. But to the point of 200%, this is absolutely impossible. So let's go to the slide number 6. What we are observing for the last few months is that the ISM, which is an index explaining what is the manufacturing production, is going to the downward direction. The consumer price index before the tariff announcement is increasing. What does it mean? It means that, one, Americans, they are consuming less. And this is the reason why, in fact, the ISM is dropping, because there is no demand. And two, the consumer price is exploding because of the anticipation of the tariff. What is going to happen in March and April, I don't know, but this is not going to look very pretty. We will go in detail what are the consequences out of those decisions. We have been notifying that because of the tension in the Middle East, the oil has been increasing dramatically of about $5. But the last days with this announcement of tariff, we saw the oil price that has been dropping back to $66, which is kind of deranging for the US economy for one reason. Donald Trump, during his mandate assignment, has been saying that he wanted to drill. You remember the drill, baby drill?
Yes.
Well, if it does so, that would be in the state of Texas, but this is shale oil and gas. So therefore, the cost of extraction is extremely high, and this is at $66. So basically, at the price of the oil right now, if he's setting up, in fact, the infrastructure necessary to extract the oil in this region, he will be producing at a loss. So therefore, the rentability, the return on investment is not there. So as soon as he will be able, in fact, to push the oil price above $66, he will be profitable. But for the moment, this is not the case. So basically, his policy has been going against, in fact, his final goal, because as much as for the transportation, it is very interesting that the price of oil is very low, but on the production point of view, this is not the case. So we see that we have two policies that are facing off each other, that couldn't match, in fact, the final goal.